Hey, what's up YouTube? This is Cold Water from Phantom Trading, and welcome to today's video on how to pick high probability POIs, or points of interest to trade off of. So of course this is going to be applicable to whatever time frame you want to enter off of, but really we're going to be talking more so about 4-hour zones and 15-minute zones, not so much 1-minute zones, because of course within 15-minute zones that's where you're typically going to look for your 1-minute entries if you want to play the lower time frame, or you can stick to just trading the 15-minute. Nothing wrong with that, and of course that applies to that as well. So let's dive into it. We're going to cover a bunch of different things to look for, as well as some things to avoid, so that we can avoid taking losses on POIs that maybe aren't that high probability. Alright, so let's take a look at the first confluence here, which is going to be whether or not our POI or zone that we want to trade off of is pro-trend, and this is going to be based on swing structure. So if you're unfamiliar with how to mark out market structure, please check out the 2 videos that we have on the YouTube channel out for free that you can watch and learn about basic market structure and order flow. It's going to help a lot with being able to identify zones that kind of respect this confluence or not. But we are going to cover a bunch of different confluences. Obviously the more confluences the better. In some cases you're not going to be able to have all of them. There's about 6 or 7 that I'm going to go through here in this video, but some of them are going to be more important than others, and I'll kind of go through that. But this is definitely a very important one, though of course this only works in certain situations, right? There are going to be situations where maybe you want to trade pro order flow as well, which would be counter trend, and that's going to be better than you just trying to take pro trend, pro swing structured trades off of these POIs, or picking POIs that follow that only, right? So let's start off by just drawing out a very simple line chart here, and we're just going to use the idea of strong highs, weak lows, weak highs, and strong lows, right, in a bullish market. And I'm just going to mark out the rough POIs, or not POIs, but the swing points that we have here. So again, if you don't understand structure, please check out those videos. There's also a PDF guide that is available for download that kind of covers all the slides in those videos, so that you can practice it and study it as much as you want. But essentially what we want to pick out are zones like this, which are responsible for breaking some sort of swing structure. So this would be our boss, right? This would be our zone that is responsible for essentially taking out all of the buyers in this case, whose stop losses are sitting here. So that tells us that really the sellers are in control here, right? And then same with this one, right? Maybe you're thinking, oh, I want to buy off of this because we're in discount, right? What happens? Price slams through that demand zone. All the buyers that were sitting below this demand zone get taken out, and that tells us that this is a pro trend supply level that would be high probability. Now of course this is a probabilistic game, so there's no guarantee that this zone is going to hold. Nothing is certain in the market. Anything can happen. Okay, remember that. So in this case, look, it gets run even though it broke a previous level of structure. And why did it do that? Maybe there was a larger weekly zone or something we tapped into, if this is the daily chart, right? Or if this is the 4-hour, maybe we tapped into a daily zone here, right? So again, we're going to look at different confluences like that to get our market direction, but essentially as long as we break some sort of major swing point of structure, then we can expect that that is a pretty decent zone, and that is a confluence that we can check off on our list of those 7 or so confluences that we look for, right? So you basically just want to look for zones that are strong highs in a bearish market, or strong lows in a bullish market, that are violating levels of supply, right? Or in the case of a bearish market, we're violating levels of demand, right? So that's concept number 1, which is whether we are pro trend or not. And again, this is applicable on the 4-hour or 15-minute. It's really more reliable on the 4-hour. Of course, the 15-minute likes to shift trend all over the place a lot of the time. But remember, 15-minute swing structure is typically 90% of the time going to be 4-hour order flow, right? So alright guys, moving on to the next example, we're going to take a look at whether or not a POI is pro order flow or not. Now, what is order flow? Essentially, it's internal structure, and of course, it means that you could be pro order flow in a bearish trend. In this case, I'm going to show you guys the example with the line chart that I put out here, but you could basically be pro order flow in counter trend, and that would still be considered a pretty high probability zone that you maybe want to trade off of, maybe in the short term, right? So this allows us to play both pro trend and counter trend POIs, so that we're not just always looking for things that are pro trend. Now, of course, there's nothing wrong with only looking for pro trend zones, but what we see a lot inside the Phantom community is that people sometimes get caught out trying to play pro trend all the time, and they end up just getting swept out a lot, right? So it is, in my opinion, healthy in practice to play both pro trend as well as counter trend POIs by using that internal structure or order flow. And again, if you guys are unfamiliar with a lot of these terms, please check out the two structure training videos that we have on YouTube for free. And again, check out the PDF guides that are in there as well, so you can study them. So let's dive into it. I'm going to start out by marking out my major swing points. We have a high, a low, a lower high that then gets confirmed as we break structure here, right? We then create a lower low, we pull back, create another lower high, and then in this case, let's pretend that this is just a wick and then we're not closing with much conviction, so we're not going to view this as a structure break, right? So we're still bearish, we'd still be stuck within this larger overall structure range, but we didn't actually break structure here, right? And then price starts to shoot up, eventually we break up here, right? And this would of course not be the swing structure, but this would be more of a substructure break, much like this one, right? Until we break our last major swing point, which then would define these two as our actual structure points, right? So I'll call that a boss to the upside. I'll just draw the little arrows here to make it super clear, right? That's our swing structure that I've marked out. Now we can start taking a look at order flow, okay? So obviously we see that we have a pretty bearish market here. Price is kind of pushing down, and now I'm going to mark out our internal structure breaks. So we have this sort of minor low that gets taken out, so we're still bearish order flow, right? Essentially we're thinking that okay, supply is still in control here. We can see that this gets respected, but then this fails to break this low, right? Then look to the opposite side and we have this demand level that starts to hold. So this demand level is holding, right? And then we start to see these substructure levels start to hold essentially, right? Or internal structure levels. Okay, so when we start to see that price is starting to push up and sort of respect these levels, right, we can see that we've now shifted to bullish order flow in a larger overall bearish leg. And to me, that's a confluence because we're looking at POIs that are essentially pro order flow. Really, we want to wait for the first level of respect. I won't go too deep into that concept, but that is something that we teach within the Phantom trading course. But regardless, essentially this would be pro order flow, right? Because if we almost look at it as structure, right? Like if this say were the 4-hour, then you would view this as likely the 50-minute swing structure, and we can see that in this case 4-hour has bullish order flow. We're respecting demand levels inside of a larger bearish leg, and we're violating these supply levels up here, right? So we're violating these supply levels, and again demand is holding. Sometimes they won't come back down and retest, right? But essentially we're pro order flow there with any of these demand levels until they eventually fail, right? So looking at the opposite side, we start to see that price begins to turn over and we shift order flow back bearish, right? We can start to see that supply is now starting to take control here, right? And again, I'm just marking out our sort of our order flow here. Again, it's not swing structure. Swing structure would be the larger circles that I've marked out here, but you can see that demand's failing, supply is starting to hold. So in this case, this would be a situation where we are pro order flow and pro structure. This one would have been counter trend, counter to swing structure, pro order flow. This one would be pro trend, right, with swing structure and pro order flow. So these are really good positions to be taking, right, because they end up running a lot more typically, right? Of course, it depends on the market, the market's condition, but in this case, It's just one example of it, right? And then same thing on the flip side. I'm just going to mark them out again. These would all be pro order flow POIs in, and otherwise it would essentially be counter trend because we are bearish overall, but it would be pro order flow. Be bullish in a bearish leg, right? So we're in that bullish pullback, taking longs, right? And then of course price ends up shifting inevitably, right? End up sweeping this low out, doesn't close, right? Hypothetically, price pushes up, and then these would be essentially pretty good levels to look for longs off of. I mean, if they come back to it, right? Sometimes you're going to see prices do something like this and maybe retest it, pretend this kind of breaks that high, right? And this would be another good pro order flow and pro trend demand level that's kind of holding, because again, we're taking out supply levels, right? So that's essentially what order flow is. And again, we'll look at examples of this on a live chart, taking a look at, we'll basically try to combine all the concepts so you guys get a sense of what to look for. Okay, the next concept that we're going to look at here is whether or not a POI sweeps liquidity. And this is one of my favorite confluences to look for, because it's honestly, it's very powerful. Sometimes it can fake you out, of course. There are going to be situations where you'll misread an order flow shift as a liquidity sweep, but to me it's one of the most interesting the most interesting ones, because you're essentially witnessing some sort of manipulation in the market where, again, the banks or financial institutions of whatever market, or whoever the market maker is, right? We could be in the cryptocurrency market. It could be a crypto whale that has the means and the ability to push the market around to grab liquidity, right? You're essentially witnessing somebody that's manipulating the market, and then you're looking to hitch your wagon to their trade idea or their move, right? That they're going to end up inevitably pushing the market in one direction or the other, right? So looking for liquidity sweeps, again, it's not the easiest thing initially, but I'm gonna give you guys some tips on how to find them. Let's just draw out a pretty simple line chart here. I'm just kind of randomly drawing this out, to be honest, but basically look a little bit something like that. And what I'm going to do here as well is I'm going to draw another line here, just so I can essentially create another example. But basically, in order to look for a zone, I'm looking for one of two things. Either I'm looking for some sort of buildup of liquidity, either to the high, above a particular range or below a particular range, and then I'm looking for a super liquidity, and then some sort of break of substructure, or internal structure or major structure. So in this case, this would be a really good demand level. If we draw the opposite example, look something like this, this would be a really good supply level that we can look for retest of, right? So this would be a good quality POI that I'd be interested in playing, right? And we can start to see that it starts to develop essentially order flow. So if we wanted to play the retest of this, the next time it comes back, that's another way we can start to stack the confluences together, right? And of course, this folds into whether or not you want to play it pro trend, which is ideal, or if you're playing counter trend but pro order flow, you're trying to play the pullback in a particular move, whether it's bearish or bullish, so you can profit off of both sides of the market as it kind of moves through and develops. So let's start off just by looking at this a little bit, and I'm not going to really mark out the structure so much here. Let's just focus purely on where liquidity is being formed. So if you guys have watched our what is liquidity video, you know that liquidity sits above and below any major swing points, right? Whether they're highs or lows, it really doesn't matter, right? So in this case, we have a huge stack of liquidity in the form of sell stop orders, as well as people who have bought from here and they've covered that low with their stop losses, right? So just imagine this is a demand zone, and then same with this one. This is a supply zone that's kind of sitting up here, and of course there's going to be liquidity sitting above that. And usually the more prominent the zone is, the more liquidity there is going to be sitting there. And same with equal highs and equal lows, or trendline liquidity, right? So we have liquidity sitting above the supply level, below this demand level. We have liquidity sitting above these equal highs as well as these equal lows. We see that liquidity gets swept here. So this to me would be a really good quality POI. And look what happens, right? we have a retest here. So before we go into that, let's keep on looking, right? We see that price continues to push down. And I'll just draw liquidity at every kind of every point that we have here. Of course, when the liquidity gets taken out, it's not really there anymore. So this almost becomes obsolete as price passes through it. It grabs it and then it pushes in the opposite direction, right? Same with this one, right? Gets taken out, pushes in the opposite direction, right? And then of course we have this one, same thing, gets taken out. So this is all just internal liquidity. Same with this, right? And we have this over here. And I'm going to leave that there because this is pretty important. You can see that this high now breaks this low, right? So there's obviously a lot of liquidity probably sitting above here. Continue to push down. Price then pushes down and sweeps this major swing point. Liquidity starts to push up and pull back, right? And again, probably liquidity here. Stop loss is sitting here from people who bought, right? They started to see this shift in order flow. Maybe they're just retail traders or people who like to play the trend, and they're literally just playing this pullback, right? This impulsive corrective move, right? So we then see price start to push up, and we end up taking out this level of supply here that people potentially may have wanted to short off of, and maybe were short off of previously, right? Because look, this POI had swept liquidity, right? So that's a big plus for it. It then takes out this low, right? And then as price is coming back to it, you're probably thinking, okay, this is a pretty good POI. And you'd be right. It does follow some of the confluences that we're looking for. It's breaking something, right? It's sweeping something, but inevitably, this POI itself also gets swept for this larger POI we have above it, right? So this is liquidity that is sitting basically in between the zone that we really do want to play overall, if we're looking at the overall picture here, which is this larger leg, and price essentially retests and takes that liquidity out, and then we see a nice and healthy reaction off of it. So this here would be a really good POI. This is an okay POI, but you have to just take note of the fact that it could get used as liquidity for a zone above it, much like this zone, right? Because remember, there's probably liquidity sitting above here. It very likely is, right? It could get used for this zone above, right? And then maybe in the long term, we'll see price do something like this. So I'm going to go over one more example here because there are a few other ways that we can look at it. Of course, we're looking at this level that got swept. We saw price continue to push up. That's great. Maybe you could have caught some sort of longs in here. That's fine. And then same with this, right? So we have this level. It broke multiple levels. We tapped into this. It sweeps it. Price continues to push up, right? So again, this would be another pretty good quality POI. Why? Because it sweeps some sort of liquidity here, right? Price comes, retests it. So if you want to take longs off of that, that's great, right? So what happens next? We have these two levels of liquidity that sort of get taken out, right? So that's something that's kind of interesting. Well, we see price takes it out, right? We're sweeping the larger overall zone, which potentially could have been an okay zone, right? Because it had liquidity kind of internally, right? Within it that got taken out. And we essentially have this zone now, which took out this major liquidity pool here. So essentially, if price had maybe come and retest this, perhaps after breaking this demand level, I would consider this another really high probability zone to take shorts off of. Now, if it continues to run as far as this, if it's going to come back, it's unlikely it's going to hold off of it. I mean, there's a chance that it might, but I would probably wait for it to set up again, wait for it to shift order flow. But essentially, that's how I would look for whether or not a zone sweeps liquidity, or if there's liquidity in between the zone itself and where price is trading to get swept out, right? Because we're basically viewing this as inducement, where essentially banks are tricking people into taking weak-handed positions, right? Even though, look, it's swept liquidity, there's a chance that price is going to sweep it out itself and tap into something above it in this case, right? And of course, that works on the flip side as well in the case of bullish price action. So it doesn't really matter. We're trading the forex market. It can go one way or the other, right? Okay, so the next concept that we're going to look at here is whether or not the POI is part of a supply chain or a demand chain. So pretty simple concept. I'm just going to draw a couple examples of it here without getting too much into structure or liquidity, but essentially, we'll probably talk a little bit about liquidity because it kind of plays into the last concept that we were talking about of having liquidity in between to induce people into selling or buying. But essentially, if we're looking for a chain, all we're looking for is this, right? So if we have some sort of chain that's developed here, of supply in this case, or demand in this case below, right? You can see that we have order flow. Again, depending on whether we're pro trend or not, of course it matters, but it doesn't matter in this case of this example that I'm trying to show you guys, right? We're really just looking for whether or not a chain is developing, because it tells us that, okay, essentially in the case of this example here, buyers keep on trying to violate the sellers and they're failing to do it. Sellers keep on defending it, sellers keep on defending it, right? And then same with this, but on the flip side, right? We have buyers that are essentially holding and sellers that are trying to take the buyers out, and they're just failing to do it. The buyers keep on absorbing all of the seller's price action, or sorry, all of the seller's action, right? So they're unable to bid the price down, right? So that's really all we're looking for in a chain. Of course, in this case, right, we generally have a few rules that we try to stick to. If a chain is overdeveloped, we typically try to avoid it. So that's kind of one of the anti-confluences that we look for if we're looking to essentially avoid a particular level. So in this case, this is probably the last time I would attack it. There are some exceptions. I know AU likes to just continue to chain and chain and chain, right? There's going to be situations like this where sometimes they work, but of course, inevitably, the more that a supply level or supply chain or demand chain forms, the more likely that it's going to take it out, right? Because of course, there's trendline liquidity that's going to be sitting above it in a supply chain or below it in a demand chain, right? And it may sweep it and continue in that direction, or it may reverse completely, right? So just something to sort of consider there. And the other thing I'm going to quickly mention here, the nice thing about supply and demand chains is typically what you'll see is some sort of buildup of liquidity in the form of a supply or demand reaction. Now, I'm not going to go too deep into this particular concept because we'd be essentially giving away one of the biggest parts of our strategy. But of course, if you guys want to join Phantom Trading, you're welcome to join us, join the community, and of course we teach all these concepts in a lot more depth than I'm going through in these YouTube videos. But that's a particularly important one that we look for, is that supply and demand interaction and where liquidity is being built, because it helps us essentially look for zones that are higher quality. So that really is one of the other confluences that we look for, but it's kind of baked into all of the concepts that we use, or all the confluences that we look for when we're looking for a good quality POI. Alright, so the next confluence that we like to look for is whether or not a zone is a flip zone or not. And by flip zone, of course, we mean a supply to demand zone or demand to supply zone. So I'm going to draw out a couple of examples here. Let me just draw it like this, actually. And let's draw a bullish scenario as well. Or sorry, bullish to bearish scenario. Okay, so in this case, right, let's look at this bearish to bullish scenario. Of course, you can have a flip zone that develops in trending price action as well. I've just drawn a couple of reversal patterns here. But when we're looking for a flip zone, essentially what we're looking for is some sort of demand level, right, or supply level that creates a reaction. In this case, it would be a supply level like so, where price is kind of trading through. We develop that supply level, we continue to push down, then we start to push up, we start to react off of it, and then we violate that supply level, right? Then looking at this level of demand on the flip side, right? So this essentially is, the whole concept of it is we're running all of the sellers out of this side of the market, and then essentially the buyers are kind of taking control. Essentially we view it as a transaction, right? And then we're viewing this as a high probability POI that we can look to take longs off of. Now, on the other side of it, in this case, we have a demand level, right, that's sort of formed here. Eventually, it gets taken out, right? So price is kind of trading up. We develop that demand level. right? We react off of it, great. Price then shoots down and violates it, taking out all of the buyers that are sitting below. And then we're looking to play the zone on the other side of that. In this case, it would be the supply zone, and this would be a high probability flip supply zone, right? So you can see the small subtle differences that I have here. In this case, this one actually like sweeps some sort of liquidity, right? So again, I'm starting to fold some of the confluences into each other. I'm looking to stack them, but essentially that's kind of what I'm looking for when we're looking for, supply to demand or demand to supply flip zones. And that's just one example. Let me quickly just clear this out and let's look at a trending example, just a very simple one here. So if we are in a bullish trend like so, and maybe we see to the left, price is kind of like this. Pretend this is, a few weeks of price action or whatever in between. And essentially we have this supply zone, right? Really, it shouldn't violate it, but you have a supply zone here. Price comes, retests it, and then eventually breaks this supply zone, and then price comes to retest it down here. This would be also considered a demand zone and a pretty like high probability zone that we can take longs off of. So that's another way that you can kind of look at it. And because we're in bearish price action for a lot of the pairs right now, you're probably seeing this or have seen this within the last few months. That is another example of a flip zone, and these are also pretty high probability. And before we move on, let me just quickly mention, right, it's the same concept as what I drew previously. You have sellers that are sitting here, sellers that are trying to defend it when price comes back to the supply zone. It gets violated. Now you have buyers that have created demand and continued to hold demand and violate, supply zones. Presumably you're expecting that this is probably going to be weak, right? So it makes sense to take longs from here, right? But yeah, let's move on to the next concept here. Okay, so next concept that we're going to go over, we kind of went over a little bit when we were looking at chains, but essentially going to look for whether or not there is some sort of liquidity to target. So what I'm going to do here is draw this kind of like so. Let me just move this over to the center a little bit so it's a little easier to see, but there's a few ways that we can look for liquidity to target. Number one is if we see some sort of a chain that is overdeveloped, right? And say maybe, we're looking for shorts here because order flow is shifted. This would be a great example of liquidity that we can target in the form of trendline liquidity that's sitting below this demand chain, right? So as much as this held, right, you probably wouldn't want to be looking for longs here on the fourth retest of this chain. Why? Because there's a ton of liquidity sitting below all of these lows that are ready to get targeted and to fuel the move to the downside. So again, this is where we would be almost like, stacking our different confluences. Pretend this is another supply level. Maybe it's swept some sort of liquidity, right? This larger supply level here. And look, we also have a supply chain. We have liquidity that's sort of sitting in between it, in between here. It's getting taken out. And we have this really high probability supply level that we can look to play. Is it pro trend? In this case, if our larger overall swing structure looks like this, it's bearish and we're expecting that this is a weak low, then look, now we have three confluences to look at, right? We have liquidity that was swept, we have a chain of supply that's formed, and of course we have liquidity to target to the downside. And of course, when we're looking at weak highs and lows, that's also liquidity to target, right? Because we're expecting this low is going to get taken out. Of course, there are going to be some buyers that are sitting here. We may even get a small reaction out of it, but inevitably, look, price ends up taking it out. And again, that's just another, form of liquidity that we can use to target, right? We typically call this internal range liquidity. Now, again, I'm not going into a lot of depth here. If you guys want to learn about how to identify all the different types of liquidity to target, again, it's something that we cover in both the live streams that we do weekly, or the backtesting calls that I do bi-weekly, as well as the market commentaries that we do in the course itself, right? The Phantom Trading course. So let's move on to the very last concept. And I feel like this one we don't really talk about so much because it is a little bit on the subjective side, but it's one that I like using quite a lot. And it's the concept of looking for zones that are essentially there when we are in a very high momentum kind of market condition. So let's take a look at an example here. I mean, we'll look at some live examples like I said, but I'm just going to draw out some pretty rangy price action, and then we see maybe price sweeps out this low, take out this liquidity, right? And then it just starts taking off, right? Taking off. And we start to see that, right? I'm going to start looking at zones, not necessarily this one down here, but I'm going to start looking at decisional zones that are kind of close by, because we have so much momentum behind the move, right? If we compare it to, this, which, is pretty rangy price action, you can see that we're just ranging for quite a long time. And then, we compare the amount of, movement, or the average, movement that we're getting within this range of time compared to the movement that we're getting from this range of time. You can see there's quite a big difference, right? So sometimes when I see that there's high momentum in the market, I'm going to look for POIs that just follow the trend, right? I don't need to get, I don't need to enter the market at the bottom floor here, right? I don't need to catch the very start of the move. I can enter a little bit later. Of course, there's risk associated with doing this, right? I need to sort of, point that out. If you're going to try to enter something that's this high in the leg, there's a good chance that you might get swept as liquidity. Sometimes we see stuff like this where it'll sweep you out and continue, right? So again, this is where we can kind of combine all the concepts, right? Obviously, if price does this, we can tell that momentum is starting to slow down. We're also getting an overflow shift, so you have to be a little bit careful. But there are certain situations where if there's enough momentum in the market, this is going to be a really good POI to play off of, right? And especially so if it is some sort of flip zone, right, from previously, right? So again, I'm just trying to fold all of the confluences together. That's typically something that I'll look for if I'm looking to take a long off of a high momentum move like this. Same with, if I'm looking to take a short in a very bearish high momentum market. If there's a lot of momentum behind it, you can typically expect that price with decent probability will respect a zone like this, right? But not all of the time. And again, I want to drive this point home that, even if you have 4 or 5 of these confluences in alignment, it does not mean that the zone is going to hold. Anything can happen in the market, right? So remember that. Alright guys, to end off this video, I'm going to show you essentially my favorite supply chain on pound dollar that I've essentially ever seen. But I mean, you'll see this type of price action on, the 4-hour. In this case, it's the daily chart. Maybe we'll look at 4-hour a little bit as well. But you'll see this even on the 15-minute. Remember, price is fractal. It tends to sort of repeat itself in similar patterns, of course, with different permutations. No single event in the market is going to be the same, really. They're all unique market events, right? And again, anything can happen at the end of the day. You have to really remember that, right? Even if you have these really high quality zones, doesn't mean it's going to hold. You can also have low quality zones that end up holding as well. So keep that in mind. But essentially, we're going to look at, just to start here, I guess let's mark out structure first so that we can kind of identify that. But essentially, we have bearish structure here, and I'll just mark that with my daily zones here. We'll also mark out order flow in a little bit as well. But you can see that price is very bearish here. And next, we'll start to mark out our actual zones, right? So we'll start with this one here. What I'm going to do is, this is a little, this is not perfect, right? But we have this demand level, which essentially creates this flip zone, right? As price then violates this low here, right? So I'll just mark it as a boss, right? Or breaker structure, because essentially we broke this low over here as well, right? Essentially price is reacting off of it, creates a few flip zones, right? But we have this one here that price respects, right? It retests it here, and then we start to essentially form this really nice chain of supply, right? As you can see here. And I'm essentially just marking out zones that are like really high probability, right? Because we have a flip that it sort of started out with. We can mark out the opposite side to identify, more flip zones, including this one, right? Again, price is reacting, it taps into the supply level, it fails, right? So we even have this kind of like demand chain here, which again is creating flips. Sometimes we'll create, flip zones that are just buildups of liquidity. And again, this is sort of like, coming together, and we're pro trend. I would say that we're kind of counter order flow. I mean, we're pro order flow in the sense that we have this chain that's formed, but we did violate this supply level. So who's to say that maybe we couldn't have taken this out as liquidity? But of course, what happens? Price continues to push and push to the downside, and we keep on respecting the supply chain. It starts to get a little bit overdeveloped, and of course, on the other side, we have a lot of liquidity to target here, right? So you have this kind of really messy demand chain or like stack of liquidity sitting here, and that's a bunch of liquidity that we can target as well. So if we check off all the confluences that maybe this zone here has, right? And this is just looking on the daily. We're pro trend. You could argue that we're pro order flow. Do these zones sweep liquidity? Yeah, they are sweeping liquidity in between, as we mentioned, right? Is it part of a chain? Yeah, it's part of a supply chain. Is it a supply to demand or demand to supply flip zone? In this case, it would be a demand to supply flip zone, right? We react here, we then violate that demand level, this demand level here. So that makes this a flip zone, right? Is there liquidity to target? Yes, there's liquidity to target here in the form of liquidity here, as well as liquidity that is sitting below our weak lows here, right? If we're just looking at structure, right? So a lot of liquidity to target. And is there high momentum? I wouldn't say there's a lot of momentum in this one, but let me quickly show you guys a real world example of kind of high momentum, right? In this case, as you can see, this is kind of the opposite of what I drew earlier, right? Because I was looking at a bullish example, but you can see there's a ton of momentum in this market, right? And you'll see that there's certain POIs that price is going to tap into and continue to respect, right? So we have high momentum in this case. Sometimes it's going to sweep it out, right, and continue pushing, but there are some zones like this which potentially you may want to play. I'd probably analyze them on the 4-hour and 15-minute, but we have a lot more momentum here than we did over here, for example, right? And again, when we have high momentum, we can kind of chase the market a bit, right? Again, I want to give you guys a word of caution. Chasing a market is not always the best approach, but eventually when you develop enough experience to find zones that do get respected in high momentum markets, you'll know what I'm talking about. They do end up working pretty well because of course you're just catching the wave, and you continue to you can continue to capitalize off of a market that is really just running in one direction, right? So this is a really good example of that. Let's quickly take a look at the 4-hour, and let's maybe see if we can find another supply chain or something, or demand chain. Let's look at something that's actually counter trend in this case. So presumably our daily, let's quickly go back on our daily and kind of mark out our structure here. So I would say that we're bearish here overall. I'm just going to do this very roughly, but we can see that we are continuing to push down, right? Create this essentially very bearish swing structure. If we go back to the 4-hour now, right? Let's see if we can find a bullish demand chain within this bearish leg of price action, right? So again, I just want to show you guys a real world example of order flow that's bullish in a bearish market. So we're essentially looking to play the pullback here. And I'll show you how we can approach taking profits with playing counter trend like this, right? So in this case, say that we took a long from this level here, right? We can see that it's part of a demand chain. We had liquidity in between it. Could we argue that these are flip zones? Yeah, I guess you could if you mark out this larger overall supply range, right? It gets taken out, right? Price is reacting off of it and then violating it. So that makes this a flip zone, right? What else? Before the chain developed, of course, we had this low here, took out this high. So you could argue this is liquidity. It sweeps it. And then, liquidity doesn't necessarily have to be swept by the zone that you're playing off of. It could start as early as, the beginning of a particular chain of demand or supply that you're looking at. So in this case, right, we have liquidity before it sweeps it. We have liquidity to use as inducement, right? You have to think, okay, people were trying to probably buy here, right? Because maybe they were trying to follow the momentum of the market. They get swept out. We tap into this zone. Maybe you take a long off of it. Even if it's the 4-hour, you could be swing trading it, right? And then because we are counter trend but pro order flow, and we're kind of getting high into this leg, we probably want to look to take profits around here, right? So essentially you could take a long here, and of course if you took this on the 15-minute, or if you can find some sort of continuation on the 15-minute or 1 minute here, you're looking at some pretty good quality trades. Now of course this looks like this was some sort of news. I'm not actually sure. This looks like it was in London session, so yeah, potentially this is some sort of news that that broke, that causes a big move, right? But essentially, this would be an example of a counter trend long that is pro order flow, because we're bullish and we're violating supply on the opposite direction, right? Or on the opposite side of the market, and respecting demand, right? So this would be a good example of that. So anyways, I hope that makes sense to you guys. I've kind of given you, a lot to work with. My suggestion to you guys is, if you are unfamiliar with structure, obviously check out the structure training videos. And then if anything, if you're looking to get better at marking out, high probability POIs, and maybe you need help with putting and piecing together an entire strategy together, of course consider joining Phantom Trading. It's a monthly subscription, and you'll get access to the entire course, as well as access to the 2 live streams that we do over Zoom every week, as well as the bi-weekly backtesting Zoom call that I do every other week. So anyways, I want to thank you guys again for watching this video. Good luck with your trading, and good luck finding high probability POIs.